You don't want bonds. Cash is a financial asset. You don't want to connect cash. You don't want a bond. It's going to have a negative real return. Like, who wants bonds? You're going to have a negative real return. You want that? Okay. And you're not probably going to get the price appreciation of the bond. There are two ways you can make money. It goes up or it gives you a good yield. It's not going to give you a good yield, negative real yield, and it's not going to go up much more when you get down to that. So you don't want the bonds. Stocks have an asset. They're a reflation asset throughout history. So there are things that you want. You want stocks. You want gold. You want tangible assets. You want real estate. You want the things that are basically anti-money. And you particularly want those when there's a large portfolio of those. Think about it right now. Through history, what we accumulate are a lot of financial assets. And the only purpose of those financial assets is to take those and convert them into buying things.
Yep.
And when there's a lot of financial assets and we produce a lot more financial assets, then they're all claims for those other things. And and if you just went through the calculations to say, okay, how much financial assets do you have relative to real assets, or how much are there? There's too many relative to the real assets. And so you want to get into those things that have more of those intrinsic values. A company is. So, and those are throughout history, you see that pattern.
Let me throw a new wrinkle in, which was not in any of the history, though. And I wonder, we can even ask this room, how many people in this room are holding some form of cryptocurrency right now? And I know you own some Bitcoin. Actually, let's do that. How many people here have any cryptocurrency at all? What do you think that is? 80%? It's like a lot. Okay. So that crypto arguably wouldn't have been a tangible asset historically. Well, where does that fit in the realm of this?
Yeah, crypto is like a lot of historic currency. There are some that have intrinsic value. It doesn't have intrinsic value, but it has a limited supply. And as long as it's accepted for payments and so on, and has a limited supply, if the demand grows more than the supply grows, it goes up, and it serves that purpose. And it's done a heck of a job of programming, stood the test of time, meaning it hasn't been hacked and so on. And so it's a viable alternative. And I think that most of the people, there are different reasons for owning it, but I think most of the people would say, is it a storehold of wealth that's limited in supply and maybe not controlled, and is it a viable alternative to a fiat currency?
Right.
I mean, like, don't trust a fiat currency. So how does it compare to the fiat currency? And so is it an alternative gold kind of thing? So there's probably an attraction in there, and it has an attraction to me in there. But then there's the question of it, and like how many in the audience, let's ask the question, how many in the audience have some in gold? I'm curious.
Let's do that. How many people have some gold?
A lesser percent.
Lesser percent. I'm going to go 50% or less, 40 even.
Yeah. So that becomes an interesting question. So, like for me, I don't have a huge amount, but I have more gold than I have crypto.
Okay.
And so and my basic thing is, rather than make it crypto or rather than make it Bitcoin or the other, I would say diversification is a good thing. We could get into the merits of the one versus the other. I don't know where you want to go with this.
Sure.
But in any case, like, let me tell you that either one of those, crypto can go like that, meaning governments can regulate it, outlaw it, or it can be traced and certain other things. So, diversification is something I would emphasize.
Part of the argument, though, on crypto, when it comes to the regulatory, is or would be that it's already reached escape velocity. That it's at a level now that there's so much value around the globe that it'll be almost impossible to shut down. It's a little bit like Uber. I oftentimes think about it like Uber, because when Uber started, people thought regulators were going to shut it down, but they grew so fast, so quickly, that all of a sudden regulators didn't really have a choice. They just had to figure out a way to deal with it.
Yeah. Okay. There are a couple of things in that. First of all, no, I think that it's easier to deal with now. Let's step back. Governments don't want alternative currency. Okay. Because and throughout history, we see that they want control over the currencies for all the various things.
Especially when you have a successful currency. But if you have a lousy currency,
That's what I mean.
like El Salvador.
Since 1700, there have been about 750 currencies. Only 20% of those are still in existence, and all of those have been significantly devalued at one point or another.
Okay.
So we don't have to pick El Salvador. We can pick the German. We can go through history and pick the most credible. It's the norm, right? And so, in any case, what I'm saying is that you don't want, if you're holding a currency, or it's an awfully good way to print money and get the money around, which is going to devalue.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
When we talk about escape velocity of Bitcoin, one of the things you have also said, though, is that if it becomes too successful, governments will ultimately shut it down. And so therefore, if you're right, you want to own it to a certain point of success, and you don't want to own it after that.
Look,
how would you define that? Kathy Woods, who was on the stage with me, said that she believes, I believe her base case 5 years from now is that Bitcoin will be worth 10 times what it is today.
See, that doesn't make any sense to me because of the following reason. Look, I'm no expert in this, but look, there is approximately, let's say, if you look, use gold as an example, and and you make the comparison. There's a certain amount of reflation, certain amount of those kinds of things going up to make a price increase. And then there's a certain market share that gold will have, that Bitcoin will have, and other things might have. If, roughly speaking, there's about, if you take gold and you take central banks' ownership of gold, I don't think they're going to be owned by, central banks are not going to own Bitcoin for various reasons. I don't believe so. But if you take jewelry out of it and central banks, there's about $5 trillion in gold.
Right.
If you take it for Bitcoin, there's a bit less than $1 trillion. So if you were to say, I'm just going to have a portfolio of those two things, right now about 20% of that portfolio, if you were to say the supply is there and you say, well, what's the right amount of that mix? That's going to be something like, okay, it's 20%. And given the volatility and the total attribute, I don't imagine that the market share is going to be much greater. And so the question is, does that market share rise? Or where do you think the market share is going to go of that? Right. You say what I'm saying. Because if it was to go like 10 times as much, then what will happen is somehow Bitcoin not only will have to be greater than the total amount of money that's held in that kind of non-fiat currency kind of thing, which seems like a stretch too far in terms of that. But it could happen if you have a problem with fiat currency as a percentage of one's own portfolio, that those things rise more, perhaps, but it's very much a stretch. And so when I'm looking at it, I'm saying, I think, shouldn't we all pay attention to those not fiat currencies, or those things where you can take them from one place to another, and that they're accepted around the world, and that they're not debt and so on. So it's that category that I think is a more interesting conversation than, and do you have a diversified portfolio of those things, and what is good balance? That's the more interesting question.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.